Hey, dividend investors, Kevin Burgess again with a weekly portfolio update. Each week, I share what's happened in my portfolio transparently, whether it's good or bad. If you're interested in seeing what happened this week, stay tuned. Okay, let's get right into the dividend portfolio update. Just a reminder, I have an overall dividend portfolio, which is split between what I call my dividend growth portfolio, which really looks for stocks who are growing their dividend quickly, or stocks that I believe have a tremendously low valuation and or a low price compared to their valuation. In the dividend yield portfolio, I'm looking for yield, basically. And so I split those two purposes, but I do add them together in my total dividend portfolio. I've changed things up a little bit. Hopefully this streamlines it and makes it go much faster. So as you can see on this slide, I've combined both of the portfolios together. You can see that the portfolio balances are $187,354 for the yield portfolio and $603,486 for the growth portfolio. In total, the portfolio is now $790,840. Now, for this week, we only received $189.50 in dividends. I'll go through those in detail in a little bit. The market change, however, in total was $7,083.45, which was almost 1% change overall for the portfolio in the week of January 14th. The dividend growth portfolio grew by 4,176, which was a 0.7% increase, but the yield portfolio has grown by 1.6% for $2,907. I think what you see is investors moving from more of the growth-oriented stocks into what we consider yield stocks. On a year-to-date basis, you can see that the portfolio has grown from a market change of 3.3%. That's 2 weeks. 2 weeks out of 2022, we are now up 3.3%. That's phenomenal growth and actually unexpected growth. In the yield portfolio, I made a purchase this week of 20 shares of New Jersey Resources. You'll see that I also bought some last week. This stock has been down in the last week or so, and I'm just taking the opportunity to add shares to my position here. I didn't enter into any new positions this week, but I did increase an existing position in the New Jersey Resources. I didn't sell anything in the yield portfolio. That will be totally different when we get to the growth portfolio. In terms of dividends received, we got 2 dividends this week, one from Philip Morris for $125 on the 10th of January. And we got another one from Main Street Capital Corp, $64.50 on the 14th. So for this portfolio, we have cash available to invest of $422. Let's move on to the growth portfolio. You'll see that I did make a purchase this week of Johnson & Johnson, 60 shares added to the portfolio. In terms of shares sold, I sold 333.268 shares of Allstate and 202.678 shares of IBM. I made videos on both of those. I will link to those at the end of this video. So if you want to see that and haven't seen those already, you can understand then what my rationale and methodology was behind selling those shares. I typically won't sell wholesale like that, but I believe that based on my research for this portfolio, it was warranted. Cash available to invest, $63,991. That's a lot more cash available than I typically want to have, but I'm going to be patient here and make sure that what I buy into makes sense. It's a good valuation and has phenomenal growth potential in the future. So I will be doing a lot more stock research, maybe looking into some new positions as well over the next few weeks. But I'm not going to rush into any stocks with this cash. In terms of dividends received, there were none for the growth portfolio. As we talked about a couple of weeks ago, the January timeframe is pretty light in terms of dividends. The dividend activity will pick up a lot in February and March. In terms of how the portfolios performed, I pulled them up on Seeking Alpha, and in the performance tab, it shows what the stocks did for the week. You can see, and I've sorted this by a descending order of the 5-day performance. My best performer was Hess Midstream, which was up 5.55% for the week. Then Philip Morris was up 4.28% for the week. Kinder Morgan, which is also a natural gas pipeline company, up 3.59%. Lockheed Martin up almost 3.5%. And Chevron up a little over 3%. In terms of the worst performers, well, Consolidated Edison was down for the week by 2.5%. And New Jersey Resources was down for the week by about 2%. Verizon was down almost 2% as well. So those were the bad performers and the good performers. So let's move on then to the growth portfolio. And I will sort that on the 5-day performance. You can see that EOG Resources was up a whopping 8.4% this week. Lockheed Martin, we talked about in the other portfolio at about 3.5%. Comcast, surprisingly, up 3.5% or 3.25% this week, which is really, really good because I'm down. I'm down about 10%, or was down 10%. I'm down about 8% on that now. Aflac was up about 3%. Tyson was up 3%. Kroger was up 2%. So overall, a pretty good week for the stocks in the growth portfolio. However, there were some offsets. Whirlpool was down 4.4% this week. Johnson & Johnson down 3.5% this week. Lowe's was down 3%. Best Buy down 2.4%. So it was a little bit of a split week for this particular portfolio, which is why the overall percentage for the growth portfolio was lower than what was in the yield portfolio. Hopefully you like this new format. It's a lot more streamlined. As you know, I'm not an investing professional. So what you see here is my portfolio, and and I'm walking you through the journey with me as I go through my portfolio. And the purpose of that is I want to inspire you to be the best investor that you can be. If you are a young investor, which obviously I'm not, I want you to know that later on in your investing journey, you're going to have a pretty big investment if you stay diligent and stay invested in the market. So I want to encourage you along those lines to invest all that you can and stay invested, and you'll see some nice fruit from that in the long run. As I mentioned earlier, I will link to those 2 videos, one on Allstate and one on IBM at the end of this video. If you're interested, click on those and see what my rationale for selling those shares was. So with that, I'm going to sign off, and I will see you on the next video.